my phone. There we go. No, it still doesn't work. Darn it. All right. Well, good evening, everybody. Uneducated Economist here. I got my screen going the wrong direction, but I can't get my phone to rotate the other way. So this is what I guess we get. All right. Gosh, I hope I can read the comments and stuff. Let me see here. Am I going to be able to? Man, that ain't going to work if I can't get the comments to come up. Let's see here. All right, there we go. Hey, Simon. Cheers, Huey. All right, Kevin. Right. Good to see you guys all up in here. Thank you very much for joining the channel today. We're going to be talking a little bit more about the Federal Reserves and their credible threats today. Now, this is something that I've covered on this channel a lot, is the credible threat theory coming from the Federal Reserve. But if you've never heard of the credible threat theory, it's pretty much the words, the jawboning, the forward guidance coming from the Federal Reserve. That, I don't know why I put those up. You can't even see them. Maybe I can turn this so you can see them a little bit. Oh, they'll get me right out of there. Man, what a bummer on this phone. All right. So the Federal Reserve and their forward guidance, their jawboning, and their credible threats, and how this actually impacts the markets, well, you can see it taking place just here in the last few days. I mean, you really think about it, the Federal Reserve has been putting out this narrative that they're going to be raising the interest rates, keeping the interest rates elevated for a significant amount of time. And like the mortgage market totally believed them. Like you see the interest rates on the mortgages shot up right away. I mean, we're talking even before the Federal Reserve even raised interest rates. I'm talking like, as they were starting to move. The mortgage rates shot up very quickly. Like they moved very fast. But then they kind of plateaued out. Like they've pretty much been sitting up at this elevated position where they are now. I mean, they kind of fluctuate up and down, but pretty much shot up and went flat for the last year. In the Federal Reserve, they have been moving their Fed funds rate up incrementally. Like, they were adjusting their Fed funds policies throughout the entire year, but the mortgage rates shot up and kind of plateaued out. Well, recently we just saw a bunch of excitement taking place within the mortgage market. Everybody thought for sure that, the Federal Reserve and their monetary policies were definitely going to impact the mortgage market in a significant way. And you saw those mortgages moving up, right? But look at some of the articles I leave down in the description. Almost as quickly as they moved up, they moved back down. Right? And we're starting to find that to be the case over the last few days, that a lot of these mortgage rates are coming down. Now, it's just the idea, right? Like nothing's changed. The Federal Reserve hasn't done anything different over the last 2-3 weeks, right? I mean, the Fed funds rates have stayed the same. There's still the narrative that they're putting out there hasn't changed. Everything is still the same, but yet the mortgage rates move quite dramatically, right? And again, this is off of their forward guidance. This is off of their jawboning. Now, you really think about this. If the Federal Reserve really wanted to add some sort of like stimulus type behavior to the mortgages, to the mortgage market, to the housing market, right? All they would really have to do is just put out the narrative, right? Just put out the idea. Hey, we're thinking about lowering rates at the next Fed funds meeting, right? We're going to drop rates going into the future. Whether they do it or not, the market is going to perceive it as, yes, they have adjusted their monetary policy and they are going to be moving into lower rates. And they will start to front run the Federal Reserve. Now you think about this, this is when people start going out there taking mortgages, buying houses and stuff with the idea that the Federal Reserve is going to be lowering rates into the future, and then they're going to try and front run that idea. Get the house now, get it at the interest rates that are high today, and then refinance it into the future when the Fed starts to lower rates. Now, I guess the strategy behind that, because I've heard other people say stuff like this, I guess the strategy behind that is that you can buy a house, even though it's expensive right now, right, with the high interest rates, going into the future, if the rates drop, well, then most likely housing prices aren't going to fall into lower interest rates, right? I mean, most of the time you would think about it, higher interest rates would mean that the house prices would come down. And although we are seeing that in a lot of markets, we're not seeing it in an extreme fashion yet. But if the markets believe and the Federal Reserve puts out the idea that interest rates are going to be dropping into the future, well, that would spark the idea of going out there and getting a house even at the high interest rates, believing that you would be able to refinance it into the future. And that alone would stimulate the housing market. Just the idea that the Federal Reserve would consider lowering interest rates before they even do it. Just the idea alone would be enough to drive markets, to drive people into the housing market, into mortgages, and then in turn start to support the housing market. So even if we start to see things like, major upset happening within the real estate market or something like that within housing, the Federal Reserve could simply just use their words to try and stimulate the mortgage market just by putting out the idea that they're going to be lowering rates into the future. So that's something that I wanted to definitely put out there, because I see it almost as plain as day when I see this occurring out there. A lot of people put this argument that the Federal Reserve is going to continue to destroy the housing market by continuing raising rates or allowing the rates to rise or something like that. That's not really an accurate way of thinking about it. I mean, it is logically. I mean, if you think about it logically, yes, that would be the case. But that's not the reality of the situation, right? I mean, we saw the mortgage rates shoot up right away last October, just off of the idea that the Federal Reserve was going to be raising rates, but they didn't move much after that. I mean, they fluctuate, but they weren't like keeping in lockstep with the Federal Reserve's Fed funds rate. So anyway. Left a bunch of articles down in the description talking about mortgages and mortgage markets and how, mortgage lenders are suffering, extreme right now. The bigger one that I like to follow is freight, right? The trucking industry, the supply chain. This is really, to me, like so much more important as an indicator than just about anything out there. I mean, you can see it slow down in the manufacturers. Now you're seeing a slowdown in trucking. Right? If the manufacturers aren't producing, then the truckers aren't shipping. And that's the major concern. I mean, you should look at that and say, man, if the manufacturers aren't ramping up production and the truckers are slowing down, that's the stuff. That's the inventory that comes through the economy. And we here in the United States, we're a consumer-based economy, meaning that we have to have stuff to sell to each other or else we don't have a job. And that's one thing that I would be really concerned about going into the future, is if you are working in the retail, economy like I am, like most people are, right? The slowdown that has taken place with the consumer is quite extreme. In fact, I was just reading an email that had come from one of our viewers talking about pallets, right? And how he collects pallets, and I got to go back through and kind of, look at the email again, but it looks to me like he has a business where he collects pallets, sells them off to like yards that collect pallets and distribute them out to people who need them. I'm assuming it's something like that. Well, he's saying like right now everybody is absolutely stacked with pallets, empty pallets of all grades. He said that pretty much the people that he sells pallets to aren't wanting them. They're like, we don't need them anymore. We're like oversupplied on pallets. Nobody's asking us for them. Nobody's shipping anything. So you think about it, if you have pallets stacked up like this, and again, like this is anecdotal evidence coming from one of our viewers, but he's been in this game for quite a few years. He says he's never seen anything like this before, at least at this kind of level. And he said that they always sometimes from what I got out of the email, he was saying sometimes they'll be having like a lot, they'll have an overstock of pallets, but they would never churn them away. They would never say, no, we're not taking them. He says now they're getting to the point that even the top pallets, like the best looking grade A pallets, only get the cheapest price that you could ever possibly get for these things. He says it's really just not worth it anymore. Well, again, that's another sign to me about trucking. Like if truckers aren't trucking, they don't need pallets, right? You need pallets to put stuff on, and then you put it on a truck and you ship it. But if none of that shipping has taken place and that manufactured goods aren't moving through the system, then you don't need these pallets for anything. And now you got an overstock of pallets that's happening. Again, that's anecdotal evidence that was coming from one of my viewers here on the channel. But still, I think it's very telling of what's going on here in the future. So again, if you look at the freight industry and you see that slowing down, you look at things within the freight industry, like the brokers, right? That's another one. People who have followed me on this channel heard me talk about the freight brokers who call to the yard. I work at a lumber yard. I do retail sales for a living. These freight brokers, they're calling me looking for stuff to ship, right? They know of the capacity on these trucks. They're trying to find stuff for these trucks to haul around, and they're calling me looking for freight. And now I have to tell them, it's like, hey, I'm a local lumber yard. I got my own fleet of vehicles. We deliver, within our own region here, our own little area, and our vendors deliver our stuff to us. So we don't really use outside brokerages. However, these guys who were like 6 months ago were ringing the phone off the hook. Like, I mean, it was like every call seemed like it was coming from one of these brokers looking to haul stuff around. Now, they're almost gone quiet. Like, I think I got 1 or 2 phone calls this week from shipping brokers. I heard another salesman talking to one, but really, like, the daily calls, like 12 calls a day, that really has backed off. So these shipping brokers, they're like going out of business. They're like, man, we're done. We don't even have anything to haul around. And there's no point in even calling anybody anymore. And you're starting to see that take place. I left a link down in the description to an article talking about the shipping brokers that are, suffering and in the pain right now of, not enough freight within the system to ship around to make it worthy to them. And a lot of this is actually left over from a bullwhip effect too, right? We have to think about, like, during the pandemic, when all of a sudden there was this huge trucking shortage that was taking place. You remember they wanted to hire the National Guard to get the containers away from the ports. You remember these stories? Well, during that time, trucking, the price of trucking went through the roof, right? Because there wasn't enough trucking out there. Wasn't enough people to drive these trucks. So if you are in desperate need of truck drivers, desperate need of trucks, well, you're going to be paying top dollar for that service, right? Because there's only so much available out there. Well, if you're paying a lot of money for this service, well, then other people will be looking at that going, wow, there's a lot of money to be made in this trucking environment. Look at the price of everything. So a lot of people start pouring into trucking, start, buying equipment, building businesses, whatever. And so they start, bringing the supply of trucking available to the economy. They start bringing that up. Well, all of a sudden, you realize there's too many truckers now inside of the economy, right? All these people who saw this high price thought, man, I'm going to take advantage of that. I'm going to get into trucking myself. And then next thing you know, there's an oversupply. They call it capacity. Right now, there's an overcapacity of trucks or of space. So now they have to go out of business. Like, there's nothing they can do. I mean, if you ain't got the business, you ain't got the business. So this is something that we're starting to see, pretty significantly within the trucking business. And again, like, to me, that is so telling of what the economy is going to do here going into the future. Because again, if you're not hauling anything, you're not going to have anything to sell. And if you're, living in the United States, you need stuff. You need stuff to sell because we're a consumer base. Let's see. I don't know. That was probably good. What are you guys talking about? And okay. Hey, Simon. Cheers. Good evening from Lakeland, Florida. Hey, what's happening, Kevin? Hey, all-nighter. Great to see you up in here. Woohoo, I'm early. Yes, you are. Hit the like button. Yes, please do. We got 41 likes right now with 128 people up in here. Let's get that like up to 100, and we'll get this YouTube algorithm to pick up this video, start spreading it around for more people to come in and hang out with the chat. Calling question on the dice. Yeah, let me switch it over so you guys can see the dice there for a second. There we go. It looks like a 1 and a 3 and a couple 5s. Oops. Hey, UE, how's it going? It's going really good, man. Thanks for asking. All right, dishes up in the house. Good to see you, Mama. All right. Oops. There we go. Safety meeting time for me. All right, man. We'll see you in a minute. All right, all-nighter. Much love, family. Hey, Patrick, man, it's great to see you up in here. Thank you for joining tonight. All right. Charlton Zimmerman. So FTX was all fraud. Hey, I'm not going to really get into FTX. I really don't know the ins and outs of that. I mean, like, other than, what I've read in the newspapers and stuff like that. But one thing that I can honestly say about cryptocurrencies is don't trust exchanges. Ever. Don't trust exchanges. And Patrick, I still have it on Coinbase. I'm sorry, man. I apologize to you personally because I know you said I got to get it off of there, and I will. Maybe we'll have a phone call this weekend and we'll talk about that. But keeping your crypto on the exchanges, even like places like I kept it on Coinbase this whole time because I kind of have a little bit more trust for Coinbase than I do for other exchanges that are out there. But really, they're not any more trustworthy than anybody else. So that's like a false illusion for me to think, right? But still, if you put your money towards, or you put your cryptos towards an exchange and you don't secure your private keys, you are subject to having them stolen from you or just lost forever or whatever. Anything could happen because you are pretty much handing it out to somebody else. You're like, here, watch these things, take care of them for me, and I'll come back for them later. You don't know if you're going to be able to get them or not. Now, I personally experienced this, had a crooked exchange steal a bunch of crypto from me. It was an exchange called Cryptsy. Right, this guy Big Vern who ran it, and I didn't know anything about it. It was like, to be honest with you, the only reason why I got an account with them is because I could like flip Dogecoin or something with them. I don't even remember why. But anyway, I was messing around with this Cryptsy exchange, and again, this is a long time ago. In fact, I think it was when Dogecoin first came out, and I had, I don't know, a couple $100 worth of crypto with them. But, what was sad is I had like 200,000 Doge or something, like some ungodly amount of Doge with them. At the time, it was only a few dollars. But, really, when we saw Doge go up to $1, I mean, hell, I missed my opportunity to have something like that in my life, right? But one day I went to go log into Cryptsy, and I couldn't. That was it. It was over. And there was an FBI class action lawsuit and all kinds of stuff. But at the time, I had like $10 in crypto, and they weren't going to give me my crypto back. I was only going to, if anything, I was going to get dollars back. So I just didn't care. I was just like, whatever, lesson learned. But it was a lesson that I did learn. So I myself got ripped off by a crooked exchange when I sent my cryptocurrencies off to them. So again, like, if you're going to trust an exchange, you're really pretty much just handing your money off to a stranger and saying, yeah, I hope you'll give it back to me someday. I mean, that's really what you're saying. All right. BRICS are into de-dollarization. China just purchases oil from... Yeah, I don't know. De-dollarization, I think, is a very far off concept. I mean, those of us who have been, here on this channel know that I've been bringing up like Gresham's Law and Triffin's Dilemma as part of the reasonings why I just don't see that there is going to be another currency that could come in and replace the dollar. Like de-dollarization, I think, is an illusion. It's a dream that can never take place. And I mean, I'm not saying that it can't take place. Like, you can de-dollarize in the sense that you don't want to do trade in dollars. That's cool. Like, whatever. And that can happen. Like, example of India and Russia, right? I mean, I've used this example many times here on this channel. India was buying a lot of oil from Russia. They were using rupees, right? Now, these rupees aren't really desired by anybody else. Like, nobody in the world cares about rupees. Like, there might be some nations out there that do deals with India that can probably use the rupees, but for the most part, most countries out there aren't going to want rupees. They're going to want dollars, right? They want dollars because everybody else is going to accept dollars. But Russia can't really use dollars because they're being sanctioned against, right? And can't have, no Russian transactions whatsoever using dollars, right? Can't have that. So now Russia doesn't really have much other choice, so they do the deals in rupees. Now they're sitting on a bunch of rupees they can't use. They're like, what do we do with these rupees? We can't, like, nobody else really wants these things. Now they could sell them, right? They could be like, let's just dump them out there on the market for something else. When they do that, like, if they were to do that, they would basically devalue those rupees. They'd like set their own currency on fire, like setting their, their money on fire by just dumping it out there, right? Lowers the value of it. So they can't really do that. They have to kind of purchase something with it almost. Well, India's like, hey, you want to invest it back with us? And it was just like, well, maybe, but maybe not. Like, what if I don't want to invest back in India? What if I want to invest in something else or buy something else, right? But no, you can't do it because you have rupees. The only place you can go to is right back to India and hope that they have something that you need. But India's sitting over there going, we are a manufacturer. What is it you need? I mean, we'll build you whatever you want. So this works out really well for Russia, right? They could go and buy it from whoever they want if they had dollars, but they can't because they've been sanctioned against. And so now they have rupees. They can have no place to go to. But India's saying, oh, no, we'll make you stuff. We'll manufacture you stuff. Isn't that awesome for us here on this side being a manufacturer? Yeah, right? So that's... you could see it. Like, Russia's just like, okay, great. So now the only place I can go to is India, and they don't even have what I want, and they said that they'll promise to make it. So now I got to invest into India so that they can produce the manufacturing base in order for me to buy something. I mean, you see how this circle doesn't work? Where if you had dollars and everybody accepted it, you could just go to whoever it is that you needed and buy whatever it is that you want. Right? So moving into a sovereign currency, unless it happens to be a sovereign currency that everybody accepts, which nobody, like, I mean, what sovereign currency would be out there that everybody accepts besides like maybe euros or something, right? There's none out there. It's just the dollar. And now, if you think about it from Gresham's law, like, how do you introduce this currency into the system, right? Because if you take Gresham's law into consideration, bad money will chase out good. Right? So if you have bad money in the system, like the dollars, right, US dollars being the bad money, and you introduce gold into the system, what's going to happen to the gold? It's going to get hoarded away. I mean, imagine it yourself. You're a dude with, dollars in one hand and gold in the other, and you go to somebody to make a purchase, right? And you say, hey, what do you want? And the person says, I'll take anything, either one. I'll take gold or dollars, whatever you want to give me. Well, if you're sitting there looking at gold in one hand and dollars in the other, you're probably going to hold on to the gold and hand over the dollars, right? Dollars go into circulation, gold gets hoarded. So the BRICS nations they're not going to be able to like introduce a gold currency. It would just get hoarded away, right? And let the bad currency go out there. And now, if you did want to introduce a good currency into the system, like gold or, something of that nature, well, then you have to have a complete collapse of the entire system, of the entire monetary system, in order for a good currency to come in. Okay? So once the entire system has completely collapsed, then I could see where another currency could be introduced into it. But until like that happens, in order to take over the dollar as the world reserve currency, like if you want to introduce something, it has to trade on an equal portion with the dollar. Like, it doesn't have to be 1-to-1, but it has to be a set amount, so people can have that idea that as long as they hold a certain amount of this, they have a certain amount of dollars. And if that's fixed, then that would be an introduction to a currency or into the world trade that could actually exist, because it wouldn't be in a competition. Like, think about it. When gold was the world reserve currency, right, and dollars were introduced into the system as a world reserve currency, the people didn't want dollars. Like, they didn't look at dollars going, oh man, this is so awesome. They wanted gold. Like, they wanted gold for their stuff. When they did transactions with other nations out there, they wanted to do it in gold. But when you realize that there's just simply not enough gold out there in the system, and you need to do transactions, and you have the United States going, hey, we can provide you with liquidity to do transactions. Check out these dollars. They work just as good as gold. And guess what? They're a fixed rate to gold. Right? So people looked at it saying, man, these dollars are just as good as gold. I mean, they're not, but they are, because they're exchangeable for gold at a fixed rate, and we get to do transactions with these dollars, which makes it a whole lot easier to do than using gold. Dollars and gold were sharing that symbiotic relationship as far as being a world reserve currency. Right? Once the people realized that there was far more dollars printed as opposed to the amount of gold that was existing out there, knowing that they weren't going to be able to trade all their dollars in for gold, it dawned on them, we got two different currencies, bad currency and good currency. Good currency got hoarded away, and bad currency ended up in the system. And that's really how we ended up with dollars. So really, you have to have something like that occur. Again, in order for the dollar to be replaced as a world reserve currency, is you have to have something that's going to trade 1-to-1 with it. Right? And that's where central bank digital currencies and cryptocurrencies really come into play, is because they can fill that spot. Right? But if you're going to come in and say, hey, I got this currency that's better than your currency, it ain't going to work. Like, you can't do that. Here, I'm going to introduce a bad currency into the system. Who would use it? Nobody, right? So you can't introduce a good or bad currency into the system. It doesn't work like that, right? It has to come in sharing that same level of appreciation, and then eventually, find its, one would be better than the other. I mean, Gresham noticed this through coin clipping, right? He noticed that, because this is like, Gresham was back in like 1500s or something like that. But they noticed that the clipped coins, so back when they had silver coins, silver and gold coins, they would clip the edges of it and kind of keep a little bit of that metal for themselves, and then spend the coin out there in the economy. And then once they've accumulated a bunch of these clippings, then they could go and, melt that down and have their own coin, so to speak. So coin clipping was very common. Well, if you had a clipped coin, right, you knew that there wasn't as much metal with it. It was a bad currency, right? If you had a full coin like that wasn't clipped, well, then that was good currency. So the good currency ended up getting hoarded and the bad currency went into circulation, those clipped coins. And this is where, again, what was it? Robert? Was it, I can't remember Gresham's first name. John Gresham? Anyway. But that's when Gresham noticed that. He was just like, hey, we got all these clipped coins in circulation where the good coins get hoarded away. Or with debasing of metal. Like, if they took silver coins and added copper to it or something like that, those particular coins would find their way into circulation where all the solid silver coins would be hoarded away. Right? And again, bad money chasing out good. Did I see a super chat there? Where is that thing? Let's go find that. Oh, there it is. Hey, thank you very much, Limitless Living, for the $5. Very cool. What car is that? Number one investor fan here. You say it plays out. What car is that? Number one investor fan. Here you say it plays out. I'm sorry, man. I'm missing it. Am I just like, am I dense here? Am I just not getting it? What car is that number one investor fan here? You say it plays out. Huh. I think I'm missing. I'm missing it. I'm sorry, man. All right. Man, I really want to answer that question too. All right. Magic Man, I started my own country and granted myself state sovereignty. Good for you. And chief of command. So I now possess presidential powers. Oops. Presidential powers and trade negotiations. Have started with several other nations. Interesting. All right. Where are my glasses? Here we go. Now I can see. All right. Jeez. Sorry, man. My stuff is old. What is that? I consider every person I meet to be potential trading partners rather than individual citizens. In this way, I have increased my power over the current societies that cover the earth. Huh. That's an interesting way of looking at it. Where's my other? There we go. Those are the glasses I want. Much better. All right. Nothing beats real resources. Inflation. That's another thing about inflation. Like, I had somebody else mention it to me the other day. I was just like, man, what's so hard for you to understand about the Federal Reserve money printing going, the increase of the money supply and inflation? Like, how is it that you just don't understand this concept? And to me, I laugh when I hear somebody say that, because the very next thing I have to say is like, okay, so if you don't think that I understand that money printing causes inflation, what I have to try and understand is, why is it that the quantitative easing 1, 2, 3, and 4 failed to produce the inflation scenario that the Fed was looking for the previous 10 years, right? I mean, people are like, man, a doubling of the money supply, and you don't think that would cause inflation? And I'm thinking, well, back in the great financial crisis, it was a quadrupling of the money supply. I mean, it took a balance sheet of $850 billion to over $4.5 trillion. And this was quantitative easing 1, 2, 3, and 4 back in 2008, right? 8, 9, however, 10. I forget how long they went for. But that was a far bigger increase of the money supply on a percentage basis than what we just went through. But yet it didn't produce the inflation scenario that the Fed was looking for. Very few people can answer to me why that was the case. Another thing is that here the money printer just recently went off. We doubled the money supply. We watched lumber go from 400 per thousand up to 1,700 per thousand, and went up 4 times, right? 4 times the price. And yet here we are back at 500 per thousand today, right? So where did the inflation go out of lumber? How come it just disappeared and vanished, right? Again, no answer to this. Very few people can answer that question, even though I was back at the height of lumber when it was running up to 1,700 per thousand, was one of the few people on the internet saying this is complete horseshit, right? This is not inflation, this is not manipulation, and we are going to see prices come back down to their normal price. Here we are. We've been here for months, right? I'm reading reading the reports from these mills out there. They're not exactly pumping out a lot of lumber, right? Now, just for an example, 2x8 16s, right? Standard and better 2x8 16s, kiln dried. Couldn't find a unit. I mean, we've been out for a week. There's like that one particular size, couldn't find them, right? That one unit. So all the rest of it we're able to, but there's holes in the production, in the inventory. Not major, not like we experienced, during the pandemic. That was bad. I mean, that was like you couldn't find anything anywhere at any time. Like it was weeks out, months out even. That's not the case today, but there is spots. It's spotty in there, right? So to me, like, I look at the lumber industry as a very big indicator of what manufacturing is going to do here in the United States. I mean, you think about it, if you are manufacturing homes, right, that's like one of the biggest products that the United States can make, right? I mean, one of the best ones. You think about it, it's like almost all domestic labor, domestic products, doesn't leave the country. Like, this is like something that is definitely a sign of economic advancement taking place, right? And if you have a slowdown in construction, well, then that's a slowdown in the economy altogether, because as you're building, you're doing the building, the labor cost that goes into it, the profits, everything that happens within the construction industry starts bleeding out into the rest of the, I guess not bleeding, but drifting out there to the rest of the economy. You think about all these laborers, a lot of times they have to travel, so they're staying in hotels, they're eating at restaurants, they're buying equipment, they're renting, they're doing all kinds of stuff with that economic activity out there, and that spreads throughout the entire economy. So if you slow down in construction, you're slowing down the entire economy, right? And that's really what we're seeing taking place right now. Oh, that's fun. My phone doesn't sit here very well like that. Okay, did I get another super chat? Yes, I did. Infamous NYC, great to see you up in here. All right, thank you very much for the $5. Very cool of you. Oops. And I can't see what those. Okay, the reason you don't see inflation is because there are only few companies in American economy, so money is concentrated at the top. That's exactly right. And so quantitative easing 1, 2, 3, and 4 had the money inflation, like all that money that was printed, it ended up on the big banks' balance sheets. Okay. So it like recapitalized the big banks, so to speak. But all that money didn't flow into the economy. That sat up at the big banks, and unless people were borrowing that money to spend into the economy, it never entered in. It just sat up there at the big banks. And so that's one of the reasons why we didn't see the inflation scenario that the Federal Reserve was looking for. See, they saw inflation in certain things, like the stock market, bond market, real estate market, things that you borrow money to buy. Those things elevated up because that's where the money was flowing to. It was the only way that was the only way it could get there, is by people borrowing it and buying stuff, right? But now we think about this recent round of quantitative easing, there was stimulus checks. Like, people didn't have to go borrow it. They were just sitting at home and it showed up, right? So here all of a sudden this money just showed up and people didn't even like ask for it, really. Well, what are you going to do? You're going to go out there and blow that money. You're going to spend it. Well, if you're borrowing money to spend into the economy, most people, like, I shouldn't say that. Irrational exuberance definitely takes place, but for the most part, people are taking some sort of caution when they're borrowing this money, right? They're thinking, man, I'm going to have to pay this back, right? But if you're getting stimulus checks, that's not good, right? Throw it to the wind. Who cares, man? I didn't earn it. It feels like I got no consequences from this whatsoever. So major difference that was happening there, right? Here all this money got printed up in quantitative easing 1, 2, 3, and 4, landed on the big bank's balance sheet, and really you had to borrow that money in order to get into the economy. This time around, the money was printed up and then sent out to the people. They didn't even have to borrow it. At the same time, they severed the supply chain. They were like, here, after you buy all that stuff, you're not getting any more, right? Even though you still have a little bit of money left, you have your bank accounts with your savings in it, and that's like, dwindling away now. But we're going to sever the supply chain. So once that bulk of stuff has been removed from the retail outlets, from the shelves and everything, it's going to be very difficult to get the rest of these items through the supply chain, right? And that's exactly what we experienced. So when people went to the store, there was nothing there. They were like, oh my God, shortages everywhere. Well, what happens when you have a supply-demand imbalance, right? No supply, lots of demand, people got stimulus checks, prices go through the roof. And There was no way of getting the stuff through. There wasn't, trucking was like in shambles, right? Remember, we were just talking about it earlier. The National Guard was going to get hired to start moving this stuff through the system. That supply chain breakdown right there, that's what drove the prices up as high as they were, or as high as they have gotten, and would cause the inflation scenario. Because really, inflation is not like, as much as people want to believe it, inflation is not caused by the increase of money, right? Period. I'm going to say that straight up just like that. Inflation is not caused by the increase in money. Inflation is caused by the increase in consumption that money has done when the increase happens, right? You can print up all this money and you shove it into a bank and it doesn't go out to the economy. It doesn't cause inflation, right? It's sitting there in a bank. It needs to actually get out there and start being traded. It needs to start changing hands. It needs to have velocity to it, right? And so if you have money tied up in a bank, it doesn't matter how much money you print. It's not going to cause inflation. But if you allow that money to get out of the bank and into the hands and people start consuming with it, that consumption then starts driving the supply-demand imbalances out of whack, right? Because all this consumption, demand's real high and there's not enough supply, prices start going through the roof. If you look at it in that sense, it makes it so much easier to understand. Right? How quantitative easing 1, 2, 3, and 4 failed to produce the Federal Reserve's inflation target of 2%, and yet this recent round of quantitative easing caused all this massive inflation to all of a sudden occur, right? But it's not so much from the stimulus money, which did do it. I mean, if you throw a bunch of stimulus money out there, people are going to go off and spend it, and it's going to cause like a flash in the pan kind of thing, where all of a sudden there's going to be like this massive consumption that takes place, but the equilibrium would have been found fairly quickly off of that. Right? But if you sever that supply chain, you just don't allow any more stuff to come through the system, now you're going to have some issues. You're going to have supply and demand issues, and that's what we really experienced. I mean, to me, that was like, I could see that coming. Like, this is the way I still see it today, in the way I've been describing it for years, right? This is how it came down. When the Federal Reserve was talking in 2018 about how it is that the major problem for monetary policy is because they were swimming up a stream of too low of inflation expectations, right? That was their major problem. Their inflation expectation was too low, and they said it many times. In fact, you can go and I posted it on my channel here a few times, but just go in and punch like Trump saying there's no inflation. All right, go and take a look at Donald Trump before he left office. He was screaming, "There's no inflation. The Fed should be printing money. The Fed should be taking interest rates into negative territory." Right? This is what Donald Trump was saying before he left office, that the Fed had interest rates too high, that they should be lowering them, and that they should be printing money. Okay? And this is all while he was still in office, before the pandemic and all that other stuff that was happening. I think to myself, man, what kind of condition will we be in today? Had the Fed listened to Donald Trump, right? Lowered the interest rates when they had them elevated, right? Which wasn't even that elevated. It was like at 2.5% or something on the Fed funds. They weren't even that elevated, right? What if they had dropped them to zero and fired up the printing press like Donald Trump said? Then go into the pandemic and have even more inflation happening, right? I mean, this is why I know, like, the administration and the Federal Reserve, they don't combat, they don't fight, right? They are definitely working in cahoots with each other, but it's not like in the sense that a lot of people are saying, right? What they do is they put out these like combated narratives. See, the reason why Donald Trump would even say this is like why it's so confusing for a lot of people on why he would do this. It wasn't for political reasons or polls or anything like that, right? What Donald Trump and the Federal Reserve was attempting to do was they're attempting to raise the real interest rates during that time. Because if you can lower inflation expectation, you can raise the real interest rates. And that is really what the Federal Reserve and Donald Trump was trying to do back when at the end of his administration. He wasn't really expecting the Federal Reserve to lower rates and start printing money. That wasn't even part of the plan. The whole plan was to lower inflation expectations out of the people so that they could raise the real interest rates. Because if you lower inflation expectations, that will automatically raise the real interest rates. If that's confusing to you, let me explain it like this. Imagine you're an investor who is intending on getting a 2% return, but you have an inflation expectation of 1%. The real return will then be 1%, what you will receive after inflation, right? So if you anticipate a 2% interest, like a 2% return, and you have inflation at 1%, then the investor will get 1%, right? Lower the inflation expectation to 0 and the real interest rate rises to 2%, what the investor intends on getting after inflation, right? So again, if you can lower the inflation expectation, then you can raise the real interest rates. And that was really what Donald Trump was attempting to do back then. It wasn't about like trying to change monetary policies or anything else. It was about changing the perceptions of the people, and it worked. It totally worked. Like, I remember, like, some of the people talking back then about firing Jerome Powell, right? They wanted to fire Jerome Powell. And, like, you got to remember, like, Donald Trump appointed Jerome Powell. Like, he was like, here, you are my guy for the Fed, right? That's who I want up in there. So he appointed him. And then later was just like, hey, man, let's go battle. Like, we're professional wrestlers or something out there for, giving each other body slams and calling each other out. But that's not really what was happening. All right. Gee whiz. Thank you very much, Edward Diaz, 1130. Thank you very much for the $9.99. Thoughts on Powell's dovish and this being a prelude to the potential downturn? Could this be a final rope-a-dope, a lead to the final dead cat bounce set up for retail investors? Well, I think everything that's coming out of Powell's mouth is a credible threat, right? I think it's all about forward guidance and markets perceptions. So again, like right now, even where the Federal Reserve stands, right? They have the market so confused on what it is that they plan on doing going into the future. Do they plan? I mean, they said that we're going to stall out. We may have another interest rate rising into the future. Maybe not. Maybe we stalled out. Maybe we have a dovish position. Nobody knows exactly what it is that the Federal Reserve is going to do. And this is something that I said was actually going to take place. Once they peak out, they're going to turn into something called data dependent, right? Where they're not going to give any kind of idea on what it is they're going to do until they actually see the data, right? And now I don't know if they've actually stated that yet, but that's going to be something that's going to be, or something very similar to that is going to be stated. And so that way everybody remains confused. And that way, if the Federal Reserve does have to adjust monetary policy, like going into like they see things or maybe like inflation isn't slowing down, because I really feel like with the shortages coming that we might have a return of inflationary pressures coming into the future, not because of like what we had experienced before we had a supply chain breakdown. We are actually going to see real shortages because stuff isn't being manufactured and shipped through the country, right? So if we see an inflationary pressure start to pick back up again, well, the Federal Reserve can just put out the narrative, hey, we're going to continue to raise rates, right? But if the market starts to stumble and things are starting to look really, precarious out there and they feel like they need to add some support to the market, they can just say, hey, we are going to be lowering rates, or have the future possibility thinking about lowering rates or whatever of that nature. Just put out that narrative of it, and the markets would start reacting as if they had already lowered rates, which would then in turn be the same or be as effective as lowering rates. Right? And this is where the Federal Reserve is going to be conditioning people. They want everybody to be absolutely confused on where it is that they stand in order to be able to conduct this credible threat theory monetary policy accurately. Like for them to be able to do it efficiently, they have to have everybody completely confused. And that way, if they change their stance or their narrative on it, the markets would react to that information. So if they're confused, that's what the Fed wants, is everybody in confusion on it. Yeah. And I'm not confused by it. Like, I see the Federal Reserve keeping interest rates elevated for a significant amount of time. I'm looking at unemployment rising. Once unemployment starts to rise, then you can start seeing the possibility of the Federal Reserve adjusting interest rates. And I'm also thinking about some of the issues that are going to be coming from the supply chain shortage that I feel is going to be happening coming into the future, and the liquidity crisis that I think is going to be taking place here in the next 3 to 6 months or whatever, or the beginnings of it. All these things are like in the pipeline here. Limitless investing. Thank you very much for the $1. The super sticker. Very cool. Limitless investing again, man. You're loading me up. Thank you so much. I saw Amazon container with Amazon logo on it, behind a semi. I have never seen that in Southwest Florida in 20 years. So big companies are putting little owners out. I think I think it is a trend that is probably going to continue. Like you'll see containers with like, a personal logo on it, like Amazon or Walmart or something like that. Like you see them already. But I think a lot of that was sparked up because of the container delays that were happening. Like if you are relying on somebody else to do it, it's like they have a service of these containers and ships and all this other stuff, but you're just looking to get them to haul things, and you can't get them to do it. Like you can't find them out there. It's very difficult. Well, you set up your own facility. You're like, fine, if I can't hire a trucking outfit to haul my stuff, I'm going to build a trucking company to haul my stuff, right? Same thing that's happening there, but it doesn't necessarily mean that that's going to be like continuing. I mean, in my opinion, when I see things like this happening, a lot of times I think it's a malinvestment that might be occurring. Again, like when containers themselves, when this came in short supply, it put a lot of companies in a bind. It put them in a very difficult position. So they had to figure out what it was that they were going to do. If you couldn't ship it by container, you had to figure out, can you get it on a rail? Can you put it on an airplane? You had all these other places that you had to go to. And it may not have been the most efficient way of going about things. Right? But because everybody was diving into this at the time, right, it increased the amount of like private transferring that these people were going to do. That's why you see the logos on these containers and stuff. The only problem with it is that it's probably not going to be as efficient as going with these companies that actually deal with that. Right? So here you've built this company up because you couldn't find the available capacity before to ship your things around. So you actually built a company to do it. And now you're finding that the capacity is all back. And these companies, they're going out of business and they're shipping cheap, right? So it makes your company or the company that you built now not nearly as efficient as it would have been had that environment of shortages continued. Did I get all that right? It's the bullwhip effect, right? If you understand the bullwhip effect, it makes a lot of sense. And again, that's why, like, even now we've already covered bullwhip effect, Gresham's law, like a little bit of Cantillon, Triffin's dilemma. What's left? I mean, credible threats. I mean, these are like the 4 economic theories plus the credible threat. Like you put these 4 economic theories into play and you include the credible threat into it, it makes the economy and everything that's going on out there so much easier to understand, right? If you don't like the 4 economic theories, Cantillon, Gresham's law, Triffin's dilemma, and the bullwhip effect, right? Those are the 4 economic laws. If you study those 4 up, learn them really well, and have them like so well ingrained into your thoughts, right, that as you are conducting yourself, you just automatically think of these things. You already know that it's going to come up. People are like, man, look at all this thing that's happening. You're like, I don't know, that looks more like a bullwhip effect that's happening. I wouldn't trust that. That's probably going to come to an end, right? You can see these things ahead of time, and that's why it's really important for it. I mean, I've been studying this stuff for a long time. I've looked at a lot of economic theories. I've listened to a lot of people talk about, what causes and effects and stuff out there. You follow those 4 economic theories plus the credible threat theory involved with it, and it clears up a lot of stuff. I mean, it's still difficult, right? You still have to kind of like, filter through the madness of it all. But man, it makes so much more sense afterwards. All right, Limitless Living. Thanks again for the $10. I see gold at $2,500 in the next month. Is going to happen. I don't know. I try not to make any calls on stuff like that. Like I was able to call out lumber coming down in price, but I couldn't say where it was going to go. I honestly thought that I believed that the inventory depletion in real estate, like the housing inventory coming down, would spark the builders. Like I just kind of almost assumed that would happen, right? That if you have low inventory and there's not a lot of homes out there being built, then the builders would say, man, with not a lot of inventory, I might want to put some product out there that can be sold, right? New houses. But that didn't occur, right? Because that didn't occur, the home builder sentiment is much lower than it was even a couple of months ago, right? It's gone negative on just about every level. Because the builders have gone negative, the demand for lumber is also low, right? Now, I didn't necessarily think that any of that was going to happen, right? I thought builders were going to pick up a little bit of pace on it and start building again, but that's not even close, right? They're not even remotely coming close into being in that position. Well, if they're not going to be into the position of building, then I can't imagine lumber going up in price right now, right? So lumber for the foreseeable future, until I see things changing with the builder sentiment, it's going to remain low, and it's going to probably stay there for a while. Now, again, like, if you were to ask me, like, 6 months ago, where do I think prices are going to be? I thought they would be between 500 and 800 per thousand, right? I mean, we barely are at 5. Well, they're at the very bottom of my prediction. Like, I mean, if it was any lower, I would be like, it would be completely under it. But it's somewhere like in the high 400s, low 500s. And if there was any kind of, again, if there was any kind of increase in demand, which doesn't seem to be in the future right now, I would think that we would see lumber prices move up dramatically, like in a quick fashion. There's just simply not enough lumber out there in the system. Again, like, I mean, we couldn't get a unit of 2x8 16s. We just can't find them anywhere right now. I mean, next week we'll probably get them, but that's just the case right now. Jesus. I'll put you guys down here. I'll put you on the armrest. There we go. Oh, that doesn't put it down there. All right. Let's see here. Mercerik, laying off 10,000 people. You're going to find a lot of shipping companies are going to go out of business. I mean, even companies that have been in business for a very long time. Because again, it's like the malinvestment that happens because of the bullwhip effect, right? When all of a sudden the demand for shipping was just off the charts. I mean, you think about it. Shipping a container went from like 5,000 to like 25,000. If you were in the operation of being able to take advantage of 25,000 shipping containers, then you would probably do it. You would probably ramp up your facility or whatever it was that, your operations in order to do that. Okay? So all of a sudden, all this capacity starts coming into the market, right? Because there was a shortage of shipping containers. All of a sudden, you have this overcapacity coming in, and then boom, all the prices start to come back down again. So again, it's like understanding the bullwhip effect makes a lot of sense, when it comes to what's happening within the economy. Talk about neutral rates again. I'm having trouble sleeping. Do you guys like that neutral interest rate talk? I mean, it's funny because like somebody said something about that the other day. They were like, in fact, it might have even been you, bro, saying something about like, you've talked about this exact thing like 10 times now, right? Talking about the neutral interest rate. And I'm thinking, I hardly ever find any articles or anybody out there ever like even coming close to talking about the neutral interest rate. Very few people even know what the neutral interest rate is, or even let alone heard about it, right? So the neutral interest rate, which again is almost like imaginary. Like there is, like, I don't know, maybe there is a place that you could go to that says, hey, this is what the neutral interest rate is. But I'm pretty sure like R-star from the Federal Reserve, is a prediction of what it's like I've read up on how the Fed figures out this R-star, right? This neutral interest rate, and it has a lot to do with like future inflation expectations and where they feel that the future and expectations are. But then you also have to adjust that for like the future expectations to what they are to where they are comparing to today. And like, it gets very confusing very fast. And like, I don't know like how the Fed comes up with this neutral rate, but simply explain. The neutral interest rate is when the Fed funds rate is neither accommodating nor restricting the economy. It's neutral, right? And so this neutral interest rate, nobody knows exactly where it's at. There's a lot of economists who say it's somewhere around 2 to 2.5%. It may have moved up since then. We read an article just recently that's saying that it had moved up to 3%, but then dropped back down to like 2.5 or 2.75 or something. again, like nobody knows exactly where this neutral interest rate is, but it does exist. There is a neutral interest rate where the Fed funds rate is neither accommodating nor restricting the economy, but not knowing exactly where that is makes it difficult to predict, like, how far above the neutral interest rate is the Fed right now. The point being behind it is that once the Fed plateaus out and they stopped raising interest rates, the neutral interest rate still continues to rise, right? If inflation expectation is still continuing to run hot and heavy going into the future, and the people's idea that, that prices are going to be moving up and that interest rates are going to stay elevated, the neutral interest rate will begin to rise. Well, if the Fed plateaus out and they stop raising rates and the neutral interest rate continues to rise, the amount of restriction between the neutral interest rate and where the Fed is trying to restrict the economy begins to diminish, right? Making it less impactful on the economy, meaning like not necessarily stimulating, but less restrictive. Just by simply sitting on their hands and putting out the inflation expectation narrative, the neutral interest rate will rise, making that restriction less, or making the elevated interest rates less restrictive. And I think that's really important to understand and follow, because like the Fed can say, oh no, we got to keep interest rates elevated right now because, we see all this pain in the economy. Meanwhile, the neutral interest rate encroaches ever closer to their Fed funds rate, making the pain less. Right? Like, I mean, it's still painful no matter how you think about it, but really, if the neutral interest rate was lower than where it is today, then it would be more painful, right? If the neutral interest rate continues to rise, the pain becomes less. And that's not something that a lot of people look at. I know people, right, dumping millions on gold bars. Yeah, I mean, there is absolutely, I can't think of any place better to be when it comes to trying to preserve your wealth than to be in physical metals. Like, I cannot think of anything else out there that comes even close to what gold and silver can do. Now, Bitcoin, on a lesser extent, has very similar qualities to it, as in the sense that you are removing yourself from that third-party claim. Like, everything out there, no matter what it is, you got retirement, you got bonds, you got stocks, you got whatever it is, it doesn't matter. If it's not gold and silver, you are subject to a third-party claim. I mean, if you got bullets and maybe land or tools or something, but really, when it comes to like most people, when they think about their wealth, like they don't think about it how many tools they have or something like that. They look at their stock portfolio, they're looking at their retirements, they're looking at, gold and silver. Gold and silver are the only thing that you can take physical possession of in that kind of sense, where you don't have anybody else. It's just you and, and your ability to protect it. That's it. And now when you take on the idea that you can put something towards a stock or bonds or, your investment or something like that, you are relinquishing that to that third party. Somebody, you have to go to somebody and say, hey man, I need my money, right? One way or the other. And that's not safe. To me, that's not a safe place to be. But then again, like, I don't think all your money should necessarily be in gold and silver either, right? It's a, turn my lights on here for a second. There we go. It's weird that light didn't. Oh, it's the switch is broken. I get it. All right. You want to borrow, you gotta pay, and the shulk. Okay. I know people right now dumping millions on gold bars. Okay, we already read that. Okay. Oops. In reality, only a free market can implement a neutral rate with any consistency. Yeah, absolutely. And that's something else that I kind of, after I studied Cantillon's essay on economic theory, and I was listening, and I read about how interest rates really affect the free market, or how they are set in a free market. When you see interest rates rise, right? When you see interest rates start to go up, that is a sign of a good economy, right? Like here we see interest rates going up and we're thinking, oh man, we got to battle inflation, we got these issues going on or whatever. In typical times in a free market, before like all the central banking authority and stuff like that, when you saw interest rates rise, that was a sign of a good economy. That was the people's eagerness to borrow money so that they could buy things in order to, to do business, right? Buying material to sell it, right? Essentially, that's what it comes down to. And that when you saw the interest rates fall, that was more people with money and abundance of money looking to lend it out there, and not a lot of people wanting to borrow it, right? Because they couldn't really use that borrowed money to advance themselves, to do business, right? So when economy slows way down, interest rates go way down. But when the economy picks up, the interest rates pick up, right, and move higher. And now this is typical of a free functioning free market, right? And that's the way you would see it. So when I see interest rates moving up like they have, to me, like when I think about Cantillon's, that's a good sign. That's a sign of a good economy taking place right there, right? And when the interest rates fall, that's completely the opposite. It's a bad economy. But yet we are so conditioned to rely on the debt that when high interest rates start to come in, it's a debt burden, right? And we can't take out as much debt, all of a sudden things start to slow down. But when the interest rates are low, everybody can borrow all this money and they can participate in the economy. So we see it completely backwards. When we see interest rates low, we think of a good economy. When we see interest rates high, we think of a bad economy. But it's in a free market, it's completely opposite of that. There is no free market. I disagree. Like, I think that free market forces are still at play. Like, no, you're right. There is no free market. But here's something that I find interesting. The Federal Reserve manipulates the system, right? They manipulate the monetary policies. They lower interest rates. They get all this money out there. Housing market goes boom, whatever, right? They manipulate the system. The moment that they want things to correct, they want to fix things, they start sitting on their hands. They do nothing. They actually start backing away from efforts, and they allow what? Free market forces to come in and start correcting, start balancing things out. So the free market doesn't exist, but free market forces do, right? All right. People still don't get it. Spending money like drunken sailors. It's, yeah, I mean, it's something it was something that I witnessed down in Vegas. And I mean, now I know like Vegas is like, amusement park for adults or whatever. But I was really blown away. Like, I don't drink and I don't gamble. So I was just kind of observing a lot of stuff that was going down there. I wasn't even really doing much. And I was super overstimulated by everything. All the flashing lights, the noise, the people, everything was just so much. But then it was just so expensive on everything, right? And like, I'm fairly conservative, especially when it comes to money. I mean, I drive cheap cars. I don't really spend a lot of money on stuff. I kind of like, have a tendency to like hold on to it, invest it, do whatever. I don't really like this frivolous, just kind of just go out there and just blow money. I just don't do it like that. But, watching like, somebody buy 4 beers and a Red Bull and spend like $52 on it, I was just like, what? Like, how is this even possible? Like, I would be so heartbroken to spend $52 on 4 beers and a Red Bull or something, but people were doing it. Like, they didn't even care. Like, like it was just normal to them. Well, here you go. They just throw all this money away, throw it all away for a couple of beers or something. Like, I don't know. But I saw it happen like crazy down there, and it really kind of was eye-opening to me too. It was just like, wow, people really do that, like they just like throw money and they just like don't need it anymore, like it's stuff is poison or something. Simon, at what price did you wish your first complete Bitcoin was purchased? Would you use less caution? I tried buying 2 Bitcoins. I was going to buy 2 of them at $18 a piece. Literally 18. They were $20 a piece, right? And I didn't even know, like, I didn't think anything about Bitcoin at the time. And the only reason why I wanted to buy 2 Bitcoins is because I wanted to throw them around to see how the the program worked. That's it. Like, I had no intentions on doing anything with these 2 Bitcoins. And I'm actually kind of glad that I didn't buy them, because that computer that I would have put them on ended up like crashing. I couldn't turn it back on, so I don't even know if I would have been able to get my Bitcoin back out of it at the time, because I just didn't care. So yeah, the first time I had an opportunity to buy Bitcoin, they were $18 a piece. Now, the last time that I was seriously looking at a whole Bitcoin, somebody had a Bitcoin token, right? And so it had real Bitcoin on it, but it was just the token that they were trying to sell. And at the time, I think Bitcoin was maybe $7,500, and this guy was willing to take $5,000 for this Bitcoin, but I didn't have it, right? I could have, if I sold off like a bunch of silver and borrowed some money, I probably could have come up with it. And I really should have, right? Because, now we know where Bitcoin ended up going to. But here's the thing, like, there was all the other Bitcoins before the forks that were on there as well. So you had all the Bitcoin Cash, the Bitcoin, like all the other forks that were with it. That was still available for that. So I really should have purchased that Bitcoin then, and that was probably about, I don't know, when was Bitcoin at $7,500? Maybe about 7-8 years ago or something like that. So it was right around then, I guess, that I had the opportunity to do it then. But now I just dollar cost average, so I just buy like $50. I try to buy it every week, but that doesn't work out too well. So I buy at least $50 every month if I don't buy it every week. Yeah. And then I'm going to do that until I have a whole Bitcoin, and then I don't know what I'll do after that. How long have we been out here? An hour. Very cool. Okay. One roll of toilet paper lasts me like a month and a half. I just don't get the TP fear. I guess I do hearing the noises in bathrooms. I can't help but think there are a lot of unhealthy people. Yeah. 5 Red Bulls is an ounce of silver. What happens if I hit this little heart on my chat screen? Yeah, please do so. Hit that little heart. It'll show that you like the video, and it'll show other people that this video is a likable video, and the YouTube algorithm will help spread it around for more people to find. So yes, please do hit that like button. How do you get rid of the heart sign? I don't know. Why would you want to get rid of it? You want to hit that button and light it up. All right. I got tot dig up, so Bitcoins I buried in my, what did I say? Buried in my ex's backyard. All right. Limitless Living, thank you very much for another $10. Very cool. You can't build gold. It takes money to process. Yeah? You can't build gold. It takes money to process. Well, that's not true. I mean, you can go and pan for gold, right? It doesn't take anything. Like, I mean, you can like literally pull that out of the stream without anything. Like, all you need is just, you don't need anything. I mean, you could literally go out there and just pick it up, right? Or you can pan for it, or you can sluice for it. Now, you can go into operation where you can really start investing time and equipment and money and people and stuff like that into the extraction of gold. But you can just go out there and get it. Like, I go out to the beach here in, just my local area, and we have black sand deposits out there. So there's a bunch of magnite and some other stuff, some heavy black sands. And little tiny flakes of gold are in that black sand, and you can sit there and pan them out, filter them out. You can use some equipment, but if you got like an eyedropper and a pan, you can sit there and pull out these little flakes. Some people remember I've shown people here on my channel some of the gold flakes that I pulled out of the Columbia River, and it's not much, but it is there, and it's gold, and you don't really have to invest into it. You can just go out and do it. Simon, you remind of Richie Valens from La Bamba. That's funny. Everybody wants to say how I have this appearance of like famous actors or famous people in history and stuff. It's like I get that a lot, and I'm just me and me, right? Money isn't even real. It's just a belief system of humans. Your bank account is literally a number on a computer. Yeah, that's true. All right. All Simon, thoughts on the Fed's pause? Yeah, we kind of talked about that at the beginning of the video, and that's really, what I feel is that the Federal Reserve is using this to establish more or to reestablish or to keep that established credible threat going. If they have the markets completely confused on whether or not they're going to raise, lower, or keep them in the same spot, then the Federal Reserve can then use their forward guidance, their words, their jawboning to then guide the markets in the direction that they want them to go. Like if they want the markets to believe that the interest rates are going to go lower and to have that kind of reaction, they can just put out that forward guidance saying, hey, we're going to be cautious in our future. We may have to lower rates. We're not exactly sure where we are right now. But if they put out that narrative that they are cautious about things and that they may have to lower rates, then the markets are going to start acting as if they had already done it. Right? So to me, this is a reestablishment of the credible threats and going data dependent or something of that nature in their speak, giving people the like being clueless on what it is that they really intend on doing. And that's how I feel is going to be happening. I don't think it has anything to do with like markets or real estate or administrations or anything like that. I think it has more to do with like unemployment and I think it has to do with unemployment. I think that the Federal Reserve is going to be looking at that fairly closely, and they're going to also be looking at like how well the supply chain is going to be functioning here in the next 6 months or so. If we have like supply going through the system fairly efficiently in a decent manner, then they probably won't be so concerned about keeping the interest rates elevated. But if there's a significant breakdown in the supply chain, like if there's stuff that's not making it to the shelves and we're ended up with shortages again, then they're going to keep the interest rates elevated just to prevent the consumer from causing the inflation to run any higher. All right. Simon, is gas really going to hike in price in the end of the year? Love from Seattle. I mean, I could. I mean, it certainly could. But I don't really see that taking place. Like, I don't know why there would be such a huge demand for gasoline to cause the prices to move up that much. I really feel that it's probably going to be more of a slowdown taking place and that there's going to be less demand for energy and that we're going to actually see the prices coming down. If oil keeps elevating or continuing to elevate, that will be inflationary pressures going into the products out there. It's like input costs coming in. Hello, friend. I saw an Instagram post today in which the poster discussed the 11% decrease in the exports from China. Oh, yeah. And other major exporters being an indicator of us being on the verge of a recession. Absolutely. Like, I mean, that's the way I kind of see it. Is just like if there's not stuff being produced, then how are we going to sell things to each other? Right? Like, I mean, that's straight up. Like, I mean, we need stuff coming from China to come into this country so that we can sell it to each other or else we don't have a job. Right? I mean, if we were a manufacturing base, I wouldn't stress this so much. I wouldn't even think about that. But we're not a manufacturing base. So what is it that we're going to do? We're not. We're going to slow down because there's just simply not going to be enough stuff to sell to each other. So, Susie, is this an indicator to you? Oh, I didn't realize Susie had asked that question. So, yeah, I mean, it is. Like, to me, that is a major indicator of a recession. Now, I don't know if it's necessarily a recession, but definitely downturn in economic activity. And if you have a downturn in economic activity, that's usually a recessionary thing coming. Thank you so much for being here, Susie. Apparently things are moving out of China and into Turkey, actually. Well, manufacturing, from what I understand, is actually moving out of China into like Mexico and Vietnam and India and stuff like that. I make a blueprint. It goes to China and the manufacturer. Mr. Cheerful, manufacturing is more than just the physical construction of the items. More money is spent on design and marketing. Patrick, okay, thank you for all your knowledge. I appreciate you. Question, how would you transfer your gold into a currency? So, are you talking about like if I have like gold in my hand and then I need to like change it into a paper so that I can use it for purchasing things? I mean, if you're asking me how I would sell my silver, I don't. Like, I do not sell silver. I have no intentions on selling silver at all. Like, it would have to be I would have to be in some serious painful situation in order for me to unload my silver. I am a stacker, and I plan on stacking to a point that I can hand it off to my kids who can stack, and they can hand it off to their kids who can stack, right? And that's like what I intend on doing with mine. Now, there was times in which that I did need to unload some silver. Like many of you know the story of me having a car breaking down. I needed to get to work and I had no other cash on me. All I had was silver, and my buddy was selling his Tahoe. I asked him if he would take silver in trade. He said absolutely he would. He drove it up to my house. I gave him 165 ounces and he gave me the title to the Tahoe. And I thought, man, that is so cool. I will never be without silver in possession again, as an insurance policy. But that was kind of like a one-shot deal. I traded it for a car. If I was to like unload little pieces of it, because like say I needed, a few $100s or something like that, and I just wanted to unload some silver for a few $100s, I would most likely take it down to the same place that I ended up buying it. You will take a premium hit, right? He sells it above above spot price, and he buys it for below spot price. That's his business. Hopefully you're in a spot in which that maybe, the spot price has moved up from the time that you had purchased it. But most likely you're going to end up having to take some sort of hit off of it. But I personally would go down to my local coin dealer and I would sell it to my guy that I know. Other than that, I do have a network of other people out there who I know buy silver. Like, they regularly buy it. So I could go to them and maybe even get it for spot price. Like, hey, I can sell you my silver and get it for whatever the spot price is, and they can save a little bit from, on their premiums and not have to go down to the store to buy it or whatever. So that would be my personal way of doing it, is probably working out trade or finding somebody that I know to sell it to, or go to my dealer and unload it that way. So that's how I would do it. But again, like, I don't do that. I am a stacker silver. Jeez. Sorry guys, my phone doesn't sit up here very well on end like that. All right. Ideally, don't sell your silver, borrow against it. There you go, if possible, or sell it like a repo transaction. Yeah, where you can get it. You get a promise to get it back at a fixed price. So exactly how much that. If you're like giving it up for collateral, give it up for collateral with a contract that you can buy it back at a certain price or something like that. Gold is a lot safer if you need something liquid. If you can buy 1 ounce coins, the VIG isn't too bad. All right. Hold value of your estate. Fiat is for transitions. I love you. At Susie? No. Do you know Susie? So you don't need to transact a whole truck of silver bullion to the business deal. Phone has frog legs. Yeah, it kind of does. Wayne Smith, land is what I pass on, and any money left will be put into a trust when I am dead and will go to paying the taxes on the said land. What the fuck happened to the market today? Everyone collectively lost their mind. Call options on physical gold. Laugh out loud. That's smart. Have you ever tickled a frog's back end hider? It does the same thing. Okay. Darn it. Get up there. Stay there. All right. Hey, thank you very much, Infamous NYC, for the $2. Very cool of you. Staked my ETH, but I dollar cost average into BTC as an escape fund. Yeah, there you go. Thank you very much for the $2. Yeah, and that's, and that's ultimately like like I've had a lot of people who've come to me and it's just like, dude, how do I invest? Like, what do I invest in? What do I buy? And I'm like, bro, I don't know, man. When you figure it out, let me know, right? I dollar cost average into Bitcoin. I have a few stocks that I buy. I stack up on cash because I feel like there's going to be buying opportunities coming into the future. But the number one question that I ask people when they ask me that question, like what do I invest in? I ask them if they have any debt, like if they have any credit card or a car loan or a house loan or anything like that. And almost always they say yes. And I'm like, well, there you go. There's your investment. Pay that debt off. Like there's no better return on your money than to pay off debt. Like straight up, like, unless you have like a 3% mortgage like I have on my house or something, then maybe not so much paying that debt off, because there could be places that you could put your money that can get a better return than say paying off a 3% debt. So like if you have a 3% debt but yet you can put your money towards something that gets a 10% return, well, that's a 7% return that you're getting off of it, right? So if you have a really low debt, then that would be like a low interest rate on the debt. That would be the only thing that would maybe hold me back a little bit from paying off debt early, right? Which is the case actually with my house. But whenever I have like a credit card debt, like when I went down to Vegas, I used my credit card a bunch when I was down there. So I have a little bit of credit card debt. I could pay it off, but I don't want to drain my savings account or whatever to pay off this or take it out of my savings. So I didn't pay that all off in one shot. I will pay it off over the course of a couple of months. But if that was a major debt, like if it was a credit card debt with, $20,000-$30,000 on it, then that would be in my investment of choice, would be to pay that thing off. And it would be so easy for me. I wouldn't even have to think about investment into anything else. All I'd have to do is just focus my direction into one area. Right? And then once that's paid off, then you can start worrying about investing into other areas to get a return. But if you are in debt, just pay off your debt. Easy to do, man. No better return on your money than to pay that off. All right. Indeed, you got to play money of, what did I say? I lost it. Where did it go? You got to play money of you get a mortgage. All right, let's move on. Here we go. Infamous NYC, thank you so much for the $5. You guys are just loading me up today. Thank you, everybody, for the support. If you have a single-digit debt, you're better off investing in skills that will go up with inflation. Look at recent UPS workers and nursing raises. Yeah, again, if you have low debt, then, or low interest debt, then yeah, not so much. Like paying that debt off doesn't probably make as much sense as investing does. But most people don't have like really low interest rate debt. Most people have debt like on credit card or car loans or something like that, and it's much higher. But I totally agree. If it's a low debt, I guess single digit meaning like under 10% or something like that. But even still, like I had a credit card that, like through my bank, that was like at 9 or 10%, and yeah, paying that off was like one of the greatest things I had ever done. One of the greatest feelings, anyway. Let's see here. Saw one dude that said max out a card, use that $5K to make a business, never pay the money back, and never get credit ever again. I would not do that. Don't do that. Like, do it if you got, do whatever you want. I don't care what you do. But I personally wouldn't do that. I screwed my credit up bad over the course of a few years, like 10 years or so. And it was very difficult when you have no money and no credit and you have a bad credit score. Like, that is a terrible place to be in. So if you have like an abundance of money and you have the skills that you think you can, do with that business, okay, well, then maybe do something like that. But man, when I ran that heavy into debt, it took me forever to get out of it, and it felt like at the time that it was never going to happen. So, this is what the problem is. Everybody is. What is that? Going against depreciating assets. Simon, how do you pay your speeding tickets? I don't I don't speed. I don't like, well, maybe the Explorer could speed, but the other vehicles don't go fast enough to speed, so I don't have to worry about that. Business credit card, though, with a 0 fixed rate for the first year as a promo, though it is a good hookup if you can make a business that can pay that principal within a year. Yeah, if you can make that happen. Oh, hey. All right, back up there you go. Simon, do you think they have more special purpose vehicles up their sleeves ahead of an election year? Well, I think I don't know about the special purpose vehicles themselves, like, setting up entities that are separated from the Fed and the Treasury in order to, buy up toxic assets or something like that. I don't know if that is actually in the cards, but things like the bank term funding program, those might be set up to deal with issues coming into the future. As far as like setting up things to deal with an election year, I don't think the Federal Reserve cares. Like they're not, like, I don't think nothing like this is the reason why I don't think these two jive, like this election year and the Federal Reserve, and things are gonna, like, the reason why I don't think this jives is because the only people who talk about that are people outside of the Federal Reserve. Okay? Like, that's it. Like, the Federal Reserve very rarely ever mentions the administration. Not in their speeches, not in their, nothing. Like, they don't, like, they can care less about it. And it seems the only people who care are the politics and people who are involved in politics. They're the only ones who seem to care about it. But the Federal Reserve, nothing in their speeches, nothing in their statements, nothing comes out of the saying like, oh, we're worried about an election year, or who's going to be president, or what's going to happen with none of that talk ever comes from them, ever. That only comes from the political side of things. So, no, I don't think they care about the election year. I think what they care about is inflation expectation, where the neutral interest rates are, money velocity. They worry about stuff like that. I don't think they care about who president is. I always remember my 2000 GMC Sonoma when I see you in your Chevrolet. Yeah, I mean, it's a good truck, man. I love that thing. What color Camaro are you getting? Man, that's a hard one for me to really, because I like the blue. I like that dark blue one, that one's pretty cool. I also like that maroon. So it's probably either be the dark blue or maroon. But really, the Camaro itself, when I look at all the different ones, I like the white one. I mean, the look of the white one is so cool. But me personally, I don't really like white cars. Like the Chevy's white, the S10. And it's not really white. It's more of like kind of a greenish color at times, because the algae grows on it here in the Pacific Northwest, and I only wash it like maybe once a year because it's an old beater pickup truck. Right? So yeah, it'd probably be the blue or the maroon. All right, I have UE sticker on my Jeep. Great podcast. Hey, thank you so much for getting a sticker and putting it on your car, man. That's very cool of you. All right, apparently the Treasury has 450 million ounces of gold to pull out. Yeah. All right. Hey, UE, what are your thoughts on driving for UPS? I mean, as far as like a delivery driver, I personally, I used to do deliveries. I used to do deliveries for the lumberyard and stuff like that. And it's a lot of fun to drive truck around and make these deliveries and stuff. But that's not my cup of tea. Like, that's not really what I want to do. I don't want to be behind a wheel, like operating a truck all day long. But as far as like just a general job, like I think that's a pretty good job to have. I've known a few people who've worked for UPS, and although it was kind of stressful for them, I think at times, for the most part, I believe that they really enjoyed working for them. So, I mean, if you were looking for yourself for a job and you're possibly, thinking about joining in on UPS, go for it. I would be a little concerned about doing it right now, considering that there's going to be a slowdown in a lot of economic activity out there. I mean, I would be concerned about even having a job working with them at some point. But if you could get on and it's a steady job, then I'd say it's a decent, honest job, right? Algae grows on it. It does. Algae grows on everything around here. If it's not stainless steel or plastic, it'll rot. Period. Like that's it. If it's not stainless steel or plastic, it'll rot. Um, Everything molds, right? So like if it's in a damp area, you're just gonna have to consider that it's gonna probably mold or be crappy. You have to. I mean, it's just the way it is. Like it rains 9 months out of the year, so very rarely do you like wash your car, right? I mean, you only wash it during the summertime. And I guess if people have like a new car or something, they'll probably be a little bit more adamant about washing it. But you should see it around here. Like people don't wash their cars. Like it's funny, because it's just raining all the time. All right. Appreciate the input. Yeah, you bet, man. Copper won't rot. No, you're right. Copper won't rot. Simon, did you use your credit card to buy your? you know, Bro, Benny, I didn't correct you on that. Um, those were Fila's. Those weren't fancy shoes. I got them at the local store down here. But I appreciate you thinking that I buy high end shoes or something like that. But I don't. They're just regular old sneakers. All right. But they're nice. I mean, they're comfortable and all. All right. I gave her a good scrubbing. What's that? Oh, hey, it's my mom. Sticker. I don't know you had stickers. I want one. Oh, okay, Mom. Yeah, I got some at the house. The next time you're up, I'll give you one. I don't know where exactly they are, but I have some. Railroad retirement is amazing for someone who is about 70. For the guys today in the railroad retirement, it's not so good. Shoes get people's attention. They do. That is very true. And that's actually something that I never noticed until like I started getting myself out of debt, started like being able to pay bills on a regular basis, and then start accumulating some savings, and start building up like a stock portfolio and stuff like that. One of the things that I noticed was shoes. Like I never noticed people's shoes before. Like I never thought about the shoes that I was wearing. But it's something interesting when I don't know, like when you notice somebody's shoes. Like a lot of times I'll see somebody's appearance and I might like, take this quick judgment shot of them. It's like, man, they must not have a lot of money by the way they're dressed. But then I'll look down at their shoes and realize, man, no, they're wearing some pretty nice shoes, right? This is not the image that I am taking of this person is not what I think it is, just based off the shoes that they are wearing. But then I've also done the opposite. I've looked at somebody else thinking, oh man, they're like, really well put together. They got their stuff, whatever. And then I look down and they're wearing some really raggedy shoes or something. And I'm thinking to myself, you're faking this image right now, right? This is a fake image that you're trying to put on. And I can tell because you're wearing some really raggedy shoes, and I can tell those are probably the only shoes you have, right? And so like all of a sudden, I'm not trying to judge people by it, but I noticed it. It was just like, wow, what people put on their feet, it says a lot about them, Hi, Mom. Hey, right on, old hider. Do you see gas going to $1.50 a gallon? Oil, I see gasoline going to $1. Thank you very much, Limitless Living. $1.50 a gallon? Eek. No, I don't see it going that low, just simply because, like, in order, like, at some point, the prices can only go so low because you have to have operation, right? You got to be able to pay the truck driver, pay the distribution, pay all this stuff. And at some point, it just gets to a point where, at a certain price where it says, man, this is no longer conducive to this, right? And now there might be like an oversupply that they try to get rid of at a lower price, but that won't be any kind of like, it won't last for any kind of significance, right? It might be just a shot, a quick shot in the dark or something like that might get there. But as far as any kind of longevity, I just don't see it being that low because you just couldn't profit at that price, right? So basically they'll just stop production, and then eventually there will be a shortage of, or not necessarily a shortage, but a short supply of it, and then the price will move back up. I wear sandals a lot. I'm a pretty laid back individual. Yeah, you're pretty laid back, all right, all-nighter. Carolina boots, the only thing my feet have been in 25 years, on a beach, an island, and Rebel Capitalist Live. Boots, that is. Right on, Wayne. Yeah, I would say that what do I have for shoes right now? I got the ones that I'm wearing. I got some nicer ones that I wear out, like I don't wear them to work. I got some work boots. I got those tennis shoes that was mentioned. That's it. So I guess I got four or five pairs of shoes. Did you blow the smoke in his face? Huh. Alright, I don't know what that was. Is this perverted world gas will go to $1.50, but the cost of everything else will rise to where going somewhere doesn't even make sense? Alright, I don't... Alright, if my feet are in boots, they're gonna be extra toughs. Yeah, that's right. And I forgot, I do have a pair of extra toughs too. And this is what's really cool about it, is that those who know what extra toughs are, you don't have to explain it. You know exactly, like, why you have them, where you wear them, the reasons why you have extra toughs as opposed to anything else, Alright, no, unless I wear suit, court, or a funeral, then I got some nice shoes. Very cool. Alrighty, guys, let's see here. Man, you guys are so... Oh, stupid phone. Alright, you guys are just also... Uh-oh, what happened here? There we go. Oh, come on. Alright, zooming in and out, I guess. Okay. Jeez. Everything. Now I'm sitting in the dark. Hold on 1 second, guys. Okay, back. The price of gas is the same today as it was in 2006 and 2012. It's cheap compared to crude oil. Is it? Yeah, I guess it did get really expensive. It got up to like $5 a gallon back in 2008, didn't it? 2006, was it? Yeah. I've been rocking the Dockers lately. Alright. The fancy camera work and mood lighting kicks ass. Yeah, it's my regular camera. I just couldn't get it to rotate to the side, so we're getting it upright. And then, yeah, my studio lighting tonight. Simon, have you looked into the change from LIBOR to SOFR? Yeah. I have, and in fact, it was pretty interesting. I was kind of thinking that there would be a bigger event that was going to come from that, especially after talking to Lynette Zhang. We had done a conversation, I don't know, about 8 months ago, I guess, and she talked about when that switch was going to happen, that all these interest rates that were established off of LIBOR would have to adjust over to the SOFR, and that there was going to be this huge change to it, and all this stuff was going to happen from it. And I thought, man, I don't know, like I got to see what's going to occur from this, but I don't really see a whole lot that has happened. Or I mean, at least, I mean, I know a lot's happened from it, but as far as like dramatic impacts to the market, I don't see that taking place from it. You know, and I think it's, you know, the the interest rate establishment, like through the LIBOR, where they were having like these, big banks, talk about their interest rates and where they were at, and throwing out the highest one and the lowest one and making an average between the three and expecting that to be like, not manipulated. I don't, yeah. It was only a matter of time before they got rid of that, I would assume. Yeah, me too, Simon. Are you familiar with Daniel DiMartino Booth? She speaks some about LIBOR and SOFR change. I am familiar with her, but again, like, I think there was a lot of like assumptions that were happening from that, and again, like when it's so well stated out there, like, not necessarily like it wasn't a secret that it was coming. It was like everybody knew. Everybody had this advance notice. If it switched in a single day, like all of a sudden they just popped off with it and it shocked everybody, then it would be a difference in it. But when you have like so much preliminary preparation taking place, like that transition would be a lot smoother and easier to do. Buy gold, yeah? Nothing a duct tape can't fix, Simon. Take my 2 cents. Alrighty, guys. So it's been super fun hanging out here. If you got any more questions, let's go ahead and throw another couple of questions out there. We've been going for about an hour and 41 minutes right now. We got $73 in super chats. Thank you so much for that support. 128 likes with 110 people. I love it when I see more likes than I have people up in here. I think that's always pretty cool. So thank you for that. In 91, mortgage CCX rates were 8.5 for a VA loan. Yeah, in 2007, I purchased a house and it was 6.25% on that one, and that was through that was the Department of Agriculture loan. Very cool. All right, guys. I'm going to call it quits. Thank you so much for being here. You guys are so awesome. Thank you very much for the support. Thank you very much for hitting that like button. Thank you very much for all the comments and questions and just, being part of this stream. I mean, this is the way we figure this stuff out, right? We break down these economic theories. We take on the discussions on what we feel is happening. We need to take this information in for the best that we can possibly take it in so that we can make those decisions for ourselves. A lot of times when we're, looking out there at information, we have this external that is happening out there. If these people were behaving better, if that was a better politician, if the banking system wasn't operating in this way, my life would be better. But that's not what's going to take place. Like, these externals can't be changed, right? The only thing you can do is take that information in for yourself and then give it the meaning that you really need, right? Because it's all about the meaning you give it. You change that meaning around, you make this information useful to you, and you can use it then to, again, make the best decisions for you and yourself and your family to hopefully find a better life at the end of this, All right. Back in the S10. Yeah, we'll do that tomorrow. How's that? Any tips for attractive home buyers? I have a home, but I have some people in my group that are looking. Um, any tips for attracting home buyers? I don't know. All right. Thanks again for all the super chats too. Yeah, thank you all night for being here, man, and keeping up on the comments and the thank yous. It's very cool of you. All right. What are your thoughts on bank bail-ins? Do you think they'll ever happen? No. I mean, I guess they could, but no, I don't think so. Not here in the United States with the Federal Reserve fraction, or with the Federal Reserve system that they have going right now. I don't think there will really be a need for bail-ins. Now, if we ever came into a situation in which that the dollar was ceasing to exist as a world reserve currency, I don't think we would have the same monetary policies in play at that time. But as far as like seizing people's banks accounts, I don't think that'll happen. I don't see that taking place. I think that the Federal Reserve would do just about anything that they can within their little hidden toolbox that nobody really knows what's in there. I think they'll do whatever they can to prevent a disruption to the banking system in that fashion. Right? Like the Fed's main goal is to keep the markets from freezing up. Right? To make sure that if anybody wants a loan out there, that there would be one available. It may not be a good loan, but that it's not frozen, that there is something there available for them to borrow. And I think that's really more of the Federal Reserve's concern. Other nations that have done bail-ins is because they really didn't have any other choice. They are not a world reserve currency. They don't have like the printing press that can just operate like the Federal Reserve does. So the bail-in situation, I'm not trying to say that it won't happen. I mean, but my level of concern over it is very low. Like, even keeping my money in the bank, my level of concern is really low, right? Even after some of the stuff that happened. I mean, people ask me that many times. I even did a video on it. Something like titled, should I be worried about having my cash in the system? I said no, but I probably should be, something like that. And it's because, like the Fed said, like, they know that there's going to be liquidity issues coming into the future. They're not going to be like, oh man, we don't know what to do. We didn't see this coming. They see it. They know it's coming. The Treasury knows it's coming. Like, everybody knows it's coming, right? I mean, there's liquidity issues that are coming. People should need to get prepared for that. And the only way I can think of to prepare for something like that is to keep my living expenses very low and stack as much cash as possible to deal with that scenario. And when other people are facing that by surprise, they're going to end up selling out of a lot of assets. I mean, they're going to sell out of their toys. They're going to be getting out of their, liquidable assets to try and pay off some of the debts that they have, to keep staying in their house or something. Active. Is that what it says? Active? God, I'm sorry, guys. I can't read this. How to attract active home buyers. I don't know, man, because everything that I do in life that I want to attract, I let go of it, right? I just let go of it. I let go of the idea. I let go of everything that could ever have possibly have been, as far as like my ego trying to figure out a way to make the future happen, right? The only thing I can say is like, you got to take on the energy and the feelings of being a home seller, right? And how that feelings and operations would look like, if you put yourself in the vibration of the things that you want, it will naturally occur. Like, the universe will just figure out the circumstances and the situations you need to be in order for those things to occur. It's almost as if it was magic. I mean, we talked about this before on how to manifest your realities. Okay? If you are putting out negative feelings, negative thoughts, negative projections, then you're going to have negative things coming into your life. Right? So, for example, if you're worried about trying to sell the house, or you're trying to, like, I need to sell it for this, at this, by this particular time, or something like that, like, you have these limitations, you have these expectations that you're putting on this house, then most likely it's going to be very frustrating and not work out the way you want it to. If you put it out there and just like, man, I'm going to let go of the idea, and just whatever happens. I'm just going to let, like, nature take its course, so to speak. You will find that a lot of times the natural effect that comes from that is that it will line up in the way that, maybe not in the way that you were anticipating, but on the way that ends up having an outcome of what you were looking for. Okay. And that's something that this is something that I've had a hard time trying to accept, is that because and this is hard to admit, but I got a really big ego, right? I mean, it's just like I see the world in a particular way, and it needs to happen in this fashion. If it doesn't come down, like it needs to land 1, 2, 3, boom, 4, right? If it doesn't go 1, 2, 3, 4, then it's not right. So that was my problem when I finally let go of the idea. It's like, let go of it being 1, 2, 3, 4. It might be 1, 3, 2, 8, 20, and then 4. Right? I mean, it may not go the way you want it to. So you just have to let go of the idea that it's actually going to happen, right? You put forth the effort, right? You do you pay attention to intention minus importance, and generally you will probably find that things will start lining up the way that, not the way you were expecting them to, but the way that you wanted the outcome to be, right? Because very rarely does it end up happening the way you expect it to, because your ego is trying to make it happen in a particular way. But if you let that go, right, and just put out the intentions, put out the effort, and minus the importance, let go of the whole outcome, right, it generally, you will find something goes in line with what it is that you were anticipating. May not be perfect, but it's there. God bless everyone on the chat tonight. Yes, thank you so much, Mike. Thank you. God bless everybody. All right, go with the flow. Love to hear that, Senior Yang. Your boss must really like you to give her car, but I bet that has helped you and your family. Great to hear there are still good, loving people out there stretching to the 69. Huh. Where intention goes, energy flows. Yes, absolutely. Where, and that's the thing, like, if you have negative attention towards something, and it's the same thing whether you're chasing a job, money, girl, whatever, that a significant, whatever it is. If you have this intention that I need this in my life, what you are going to do is you're going to repel it, right? You're going to repel that very thing. Think about it. If somebody was just like, I don't know, somebody was just constantly bugging you for something, and it was just like, hey man, we need to do this. Are we going to do this? Are we going to do, eventually you're going to be like, dude, just fucking back off, right? I mean, it was just like, it's just too much. That happens for anything, whether, like, especially when it comes to money. If you're chasing money really hard, like, you gotta get it, you gotta get this done, you can't put anything, you make it happen, you put up this, almost like this negative wall between you and the money, right? And it's just like, it makes it very difficult to try and acquire it. But if you know how the money flows, like, the money comes in from doing sales, right? And instead of being like, I gotta get the biggest possible sale I could ever get, you just think to yourself, I just need to get this sale done. I got to get this particular sale done, and then I'll move on to the next one. But I need to do this one, I need to be efficient at it, and I need to make sure it's done. I can't worry about the next one that's coming, or all the rest of them, or all this weight of getting this stuff done. That's not the way it happens. You make sure you take care of this sale, and then once it's completed, you move on to the next one, and you don't deviate from that plan. You just make sure that you just line the next one that comes up, you just work it. You just keep working it. And you don't think about like how big they need to be, or, anything like that. You just make sure you just start taking care of the next one, and you just get it done. And when you do this, you'll find that, like, there's a lot more sales coming towards you because you're more efficient. People want you to, do their sales. They want to order stuff from you. And pretty soon you're just like, you're swimming in it. It's like you didn't even, like, before you might not even had a sale, and now you're just wondering how it is that you have so many coming to you, right? You're just in an abundance of it. You don't even think about it anymore, right? And that's the way it goes for a lot of stuff out there. The moment that you chase it, it runs, right? And it's everything in life. If you chase it, it will run away, right? But if you sit there and you're just attractive, then it just comes towards you. All right, you just put out the energy that has very like little outcome involved. The only thing you worried about is this exact moment right here, not what the future has, you know. And it's all about the vibes. It is. Alrighty, guys. It was a lot of fun hanging out here, but my phone doesn't stay upright, and it's getting late, and I'm getting hungry, and you guys are just so awesome for being here, so I can't thank you guys enough. All right. Uneducated Economist. You guys let me know. Thanks for the advice. Yeah, Benny. I mean, I'm serious, man. If you're really serious about it, yeah, put forth the effort that you can, you know, towards it, and then just let it go. Just let go of the idea. Don't try and force the outcome. Don't try and make anything happen. The universe will naturally allow it to occur for you, and it'll happen in a way that you are least expecting. That's usually what ends up happening. It's just like, man, there it is. You know, like I think about like meeting G. Edward Griffin. Like I was not expecting for my encounter to meeting G. Edward Griffin would be as awesome as it was. I mean, Patrick set me up, man. We had lunch. I sat next to him at the conference. It was like I had hours of like, you know, conversation engagement with him. It was one of the most incredible experiences I've ever had, and I didn't do anything to make that happen other than just putting out my effort on my YouTube channel. And that was one of the greatest moments that I have ever experienced. And I didn't even like try to do that. Like that wasn't what I was trying to do. Like in my head, I think it would be cool. It would be awesome to have, you know, a meeting with G. Edward Griffin, but I didn't know how that was going to occur, and I wouldn't know how to set that up. I didn't need to. It just all occurred all on its own. And everything in life can do that. Like everything in life can do that. The world is full of abundance, right? If you don't have something in your life, think about it. You're probably chasing it, right? Because this world is full of abundance, if you have something that you're lacking, what you have is an abundance of lack, right? Because the world is nothing but abundance. And you just have to put yourself in the right vibration in order to have that abundance come towards you. Okay. Uneducated Economist, you guys let me know.